Hi, I'm Simon Lambert of This Is Money. Joining me in the studio, I've got Dale Nicholls, Portfolio Manager of Fidelity China Special Situations. Dale, thanks for joining us.
Thank you.
Dale, we very much over here see what's going on in China through the filter of whatever's being reported in the news at any given time. But you're over there, travelling around, meeting companies, seeing what's going on the ground. What is really going on in China at the moment?
Yeah, I find there's a lot of focus on growth in China and the fact that things are slowing. And I do think that growth is slowing, but I also think that's natural and necessary. You need, this shift that the government is trying to bring, the shift away from a reliance on investment, particularly debt-led investment, towards consumption, is something that needs to happen. And growth is likely to slow as a result of that. But I don't think it slows significantly. And whatever the final growth number is, as a result of that, the consumption is going to be growing faster. And that's the trend that I see on the ground, this, the consumption story, this natural development of the middle class. And you see that coming through in the consumption-related areas. So my sense is that, the trends overall for companies that are operating in those key areas that are benefiting from that shift continue to grow quite nicely.
And presumably that's obviously something that doesn't happen overnight. It's something that takes time. Right. So that is a gentle shift.
The interesting thing I find about China is there's huge variance in growth levels between different parts of the economy. So you're seeing companies that are really benefiting from that shift, seeing significant growth rates, and then the losers, the companies that are on the negative side of that shift, you can see their businesses actually slowing pretty significantly as well. So there are actually quite significant gaps between growth rates depending on which part of the economy that you're focused on. And as a stock picker, that's actually something that's good. You can be selective and focused on the areas that are really benefiting from the shifts that are happening on the ground.
We see stories about empty cities, empty factories,
right.
big development projects that then there's nothing gone into.
Right.
And is that a concern for the Chinese economy, or is it actually genuinely pivoting towards that consumer growth?
Yeah, I think it's it really depends. There are clearly parts of the country where you have seen these projects that have gone ahead, and you've got extra capacity in certain cities. But in other areas, particularly you see often the media pick up on these ghost cities. I've been to quite a few of them, and you find that the ones where there really is this process of urbanization happening, the shift to the cities. Although there can be capacity built ahead of time, generally things get filled up over time. So I found with some of those ghost cities, when you visit them, a year or two later, they're actually activity is really picking up.
That must be a really strange place to visit. Just to ask.
Right.
To wander around one of those empty places and think, is it entirely set up for people ready to completely move in?
Again, it depends. But there have been cities that I've been to, particularly parts of Inner Mongolia, where you've seen a massive build out, and really you just haven't seen the pickup to really sort of fill up a lot of the facilities that are there. But again, there are other areas where you've seen the build out, and then as part of the natural urbanization process that's happening in China, they actually do get filled up. So it really depends on the particular project, the particular area. But overall, despite the negative data points, the economy does continue to grow, and that just sort of that natural development of the middle class and the growth in consumption is something that we definitely see on the ground.
And so, where do you see the most exciting opportunities amongst the companies that you look at the moment?
Right. So it really does come down to consumption. I think as I've said, that's the really big story about China, and it's really just. Where I tend to focus is on the areas where penetration rates are naturally going to increase. If you think of an area like the auto space, so China is now the biggest auto market in the world, 25 million or so vehicles. But if you look at penetration, it lags significantly relative to the West. So despite the fact that the market has grown so much, there's a lot of room for penetration in areas like autos and a whole range of consumer sectors to grow. So I try to focus really on the companies that can lead. And grow in those categories.
And I mean, one thing that often gets stereotyped about China is that these companies are simply just copying what goes on in the West. They take the Western idea of the product and they go, right, well, we're just going to copy that. They do it cheaply, they do it easily. But that's not true about China nowadays, is it?
Yeah, I think you do see an incredible amount of innovation actually occurring, particularly if you look at for example, the internet space, and you look at the companies that the big innovators in that space, whether it be Alibaba or Tencent, I think a lot of the initial progress or the initial business models were based on models in the West, but you see them really developing beyond that. If you look at somewhere like e-commerce, the penetration of e-commerce in China has already surpassed many countries, for example, the US. And it kind of makes sense when you think you just haven't had that retail build out that you had decades ago that you saw in the West. So it makes sense that people make that transition faster to areas like e-commerce. And you see it across a number of sectors. You see, for example, mobile penetration and things like mobile payments and that sort of thing. You see that penetration actually happening a lot faster, and that shift's happening a lot faster than you often see in the West.
So when you're looking at companies, regardless of what they do, really, what do you look for in that company?
Right.
Is there specific attributes that you say, right, I want this company
Sure.
to have?
Yeah, there's three broad things that I focus on. So the first is growth. And when I say growth, I'm not, is the company growing 10% or 15%? I really think about what's the long-term opportunity set for the company? How big can this company be in 3, 5, 10 years if they can execute on the opportunity that's in front of them? And secondly, I look at returns. So there's a lot of companies that grow a lot but don't generate great returns. So really thinking about incremental returns on capital and free cash flow generation. And to understand that, you really need to understand a company's core competitive advantage and how strong their moat is, so to speak. And the third factor is management. So you can have a good business with the opportunity, but management needs to execute. So, I spend a lot of time on the ground meeting with management teams, and getting a good feel for the ability of management to execute is something that's really important as well.
Is it the situation that when you can find a company that does something like that,
Right.
they've got a good product or a good service or a good idea,
Right.
and they've got that good management, they've got that good cash flow, that you think that almost regardless of what else goes on, this company should do well. It should rise above the tide.
Well, that's the conviction that I try to get. But in China, there's great growth potential, but it's a very competitive market. So you actually really need to follow the stories. You need to be evaluating the competition. You need to be evaluating how the environment that the company is operating in is changing, and that's why, again, a core part of our process is getting out and meeting with the companies, but also meeting with the competition, with the suppliers, with the customers, to get a real full picture of the opportunity set for the company.
Could you give us some examples of those companies that you like at the moment?
An example of a company that springs to mind is a company called Gourmet Master, and they've got effectively a coffee shop. And the format that they have really seems to be getting traction in China right now. So you're looking at a company with 500 or so stores, but given that the format really seems to be working, you wonder why can't it be 1,000 stores or 2,000 stores if they're able to execute when you think about the potential size of the market in China.
And that's obviously something that we've seen work many times with companies over here in the UK or over in the US. So there's no reason why a company in China can't do exactly the same thing, presumably.
Absolutely. If the format works and management's able to execute, the opportunity is absolutely there.
And with those companies, is there the opportunity, obviously China itself is a huge market,
Right.
Is there the opportunity for those companies to start pushing out beyond China, into the area surrounding it, but also into selling over to us in the West? I mean, for example, if you look at Geely, the owner
Right.
of Volvo, that's
Right.
doing a great job with Volvo at the moment.
I think you'll increasingly see that, and we see companies that, because the market in China is so big, they've got significant volume, and so they're using that volume and the cost benefits, or the scale benefits that brings, to take that cost advantage offshore. So you see it in areas like appliances, autos. Potentially not so much at this stage, but I'd actually be more positive on areas like appliances, whether it be washing machines, air conditioners, that sort of thing. If you look at the companies in that space, they're really leveraging that domestic volume and taking that cost advantage offshore and growing their business offshore.
One final question, which I have to ask, the Donald Trump as president question.
Right.
Obviously, he's said plenty of things about China in the past before the election,
Right.
since the election. Do you see him as a threat to that China growth story, or an asset to that China growth story, or does it not really matter?
The world economy has benefited significantly from the growth in global trade over the past few decades. So the degree that trend starts to move in a different direction, that's obviously not a positive. What I would say though is that if you think about trade friction between China and the US, that's something that's been there for quite a long time, and so I wouldn't necessarily view it as a new thing. If you look at the proportion of exports out of China's total exports to the US, that proportion is actually falling. But it's clearly a risk if you are focused on the exporters. There is potential for that to hurt exports. Having said that, again, my focus for the trust is on the domestic economy. So if you look at the total revenues and the geographic exposure of the companies that I own in the trust, the proportion that's going to the US is only about 2%. So again, I think the real story about China is about the domestic economy, and that's where I think the opportunities are, and that's where I'm focused on in terms of investing for the trust.
Dale, that's all we've got time for. Thank you very much. Thank you very much for watching. Goodbye.